this is something I want your attention on. Actually, it is like kind of a policy rate prediction, but it's not. I'm not predicting anything. I'm just explaining the current situation. So, what do I think is that we should first understand the Bank of Japan's past. Japan was into the yield curve control, and there were decades of obviously negative interest rate policy because the Japan was very much fighting with the deflation. The rates were negative there just to stimulate the economy, but the negative rates are pretty much dangerous on long-term basis, and it actually mostly does not do the job of stimulating the economy. I think so. There are some examples out there. So what the Bank of Japan did back then at the start of 2024 was they actually stopped it after feeling a bit of the inflation in the economy. It was the inflation from the imports because of the rising of energy costs because of the Russia and Ukraine war, but it was also related to the wage growth inflation. The wages got risen up back then, and it was the first time in 30 years to tackle that inflation. The Bank of Japan raised the interest rates back then. This was the kind of normalization. They were taking the initial steps back then, and they were expecting a gradual tightening along the way, tightening of the rates. And I think they were just pretty much confident that the economy is going to stimulate. But market actually tested Bank of Japan's move very quickly. Yeah. So what we need to understand here is that currently the Bank of Japan is leaning towards the no change in interest rates in the upcoming meeting. The market consensus is that it is betting heavily on June hike, not on the April hike that's just next week because of the uncertainty of the imported inflation and all other things that's around the Iran and US war. It's something that is making the Bank of Japan to be hesitated towards hiking the rates. So market participants are expressing that the June policy should take a move because the rising global energy costs that caused the imported inflation and oil future speculation, which actually tells a bit about the physical market on one hand, but it is going to affect the decision of the BOJ also. That's causing the yen to get weaker and weaker. Since the start of the war, the yen got a lot weaker. You can just see it here. And the resistance level, which is kind of around 160, market participants are seeing it as like if the yen surpasses this level, then it's going to be something that the Bank of Japan has to do about it, or the Ministry of Finance of Japan has to do something about it, because the further weakening is going to cause very much harm to the consumers, the domestic consumers. So that's the resistance level that the market is seeing it as. And since the start of the war, the yen actually weakened a lot, and that's not healthy in the long run. But let's talk about some indicators. It is the overnight index swaps, and they actually kind of price in the probabilities of the rate hikes or rate declines. In the late March, these swaps actually was pricing in the 73% probability of rate hike in April. But currently, near the term, it's just 5%. Market participants are saying that Bank of Japan is not going to raise up the interest rates sooner. That's what the market is predicting kind of right now. But that needs to be done somehow. So let's see if the situation goes on like this, what's going to be effect on the domestic institutions and people. The winners are going to be the mega cap exporters, the Toyota Motor Corporation is an example of that. Because of the yen weakening, profits and the revenue is going to rise up a lot domestically, And yeah, the overseas earnings is also going to be very good for the domestic people. And yeah, the domestic households and importers are going to lose a lot. The weakening is something that actually targets them first. And yeah, there are a lot of pensioners and people who invest in the fixed income assets. So they are going to be affected by this weakening a lot if the BOG does not hike sooner or the Ministry of Finance does not intervene. So let's talk about the Ministry of Finance a bit. During 2024, Ministry of Finance actually spent $100 billion collectively to support the yen. Yeah, BOG actually kind of left the interest rates to not the hike so much. So the decision was actually a bit faulty for the yen. After that, the Ministry of Finance actually had to intervene into the market and sell the US treasuries to support yen. That's one thing that traders are looking at, because they are thinking that if the BOJ is not going to do anything about the yen, then what if still Ministry of Finance is going to support it or not? They are looking at the two sides. So currently, the Ministry of Finance has something to say about it, because recently Finance Minister actually appeared in an interview and she said that we have a free hand. We are standing very strong. She is saying that if we feel the need of intervene, we are going to do that. So she also said that we actually corresponded with the U.S. Treasury Secretary Scott Bessent, and they are seeking the U.S. assistance in this matter of supporting the yen. So this is something that traders are also looking at. And yeah, currently market is saying that Bank of Japan is behind the curve because the rate hike is needed now. It is better to do now, but later in June, that must be done somehow. The market is saying that if in this meeting BOJ is not going to indicate any kind of rate hike in June, or just make the market comfortable around it, that's going to cause a lot of weakening in yen, and that's going to hurt a lot of domestic people also and institutions. So this is the analysis I wanted to share with you. So I hope you got something valuable out of it. Share it with your friends if you want.